Hello, friends. Welcome to Stocks for Retail Investors. As a retail investor, our target is to save, create wealth, and earn. Do not lose your hard earned money in gambling. If you are interested to get more recommendations, then click on subscribe and bell icon. Do your research before investing in any stock. Also, let us know your insight in comments. To have a detailed understanding about our discussion, please continue till the end and don't skip any part. It will be helpful for you. So today we are going to discuss on one of the largest private sector bank in India. Yes, it's HDFC Bank. So this is their annual report. So here you can see the current CEO of the company is Shashidhar Jagadishan, Managing Director and Chief Executive Officer, HDFC Bank Limited. Now next I was just going through these are the all-round performances. Here you can see it's total balance sheet size is 17,000 sorry more than, I think it's around 7 lakh crores, sorry, 7 lakh crores, so it's 17 lakh 46,000 871 crore is the total balance sheet size, and then net profit is 31,116.5 crore, and rupees earned. Here you can see the dividend per share has improved here year after year. Yes, it's a dividend given is a bit less from 19 into 21. These are the balance sheets, but this is not that important at this moment. So the what it caters to? It caters to wholesale banking, retail banking. So the products details you can see here. In wholesale banking, there is working capital facilities, term lending, project finance, debt capital markets, merger and acquisition, trade credit, supply chain financing, forex and derivatives, cash management service, and etc. And in retail banking, also individual borrowers, salaried and professional borrowers, micro and small size business, extremely small businesses like kirana stores, self-help groups, non-resident in NRIs, non-resident in Indians. And it has a lot of products and services like auto loan, credit debit prepaid cards, personal loan, home loan, gold loan, mortgage, commercial vehicle finance, saving account, current account, fixed and recurring deposit, retail business banking, agri and tractor loans, SHG loans, Kishan gold loans, and the list continues. Also, it has treasury. The treasury is the custodian of the bank's cash, liquid asset, and management. Its investment in securities and other market instruments. It manages the liquidity and interest rate risk on the balance sheet, and is also responsible for meeting statutory reserve requirements. And the list continues. So this is what it caters to. India, it is the largest private sector bank currently. There is no doubt about that, about the fundamental strength of the company. Now, next come to here. Why? So this is the chart. Today it is trading at around. Currently, it is trading at around 1300 45, 1.3% up, and yes. So it's a private banks with a market cap of 7,36,100 crore. Stock is ranked 4. So stock is 1.45x as volatile as Nifty. Now, intrinsic value, current price is more than the intrinsic values. Yes, it's a good company. That's why it is trading higher than the intrinsic value. Return on equity versus FD rates. Stock has been generating better return on equity than FD, bank FD. Dividend, it doesn't offers a good attractive dividend rates. P ratio, here you can see 23.12, and sector P is 24.04, so it's almost same. Now, what are the peers? Peers is ICICI Bank, Kotak Mahindra Bank, Axis Bank, IndusInd Bank, and Bandhan Bank. This is what. Here you can see the revenue of the financial revenue trend. In 2018, it was 1.01, and in 2021, the revenue has increased to 1.56. So it's a year to year, it's growing. The profit has also grown year to year from 2018-19. You can see 0.19 to 0.22, 0.27, and 0.32, despite of the fact that COVID was there in between. Total promoter holding in last 6 months, promoter holding in the company has almost stayed constant. The pledge promoter holding is insignificant. In last 3 months, mutual fund holdings of the company has almost stayed constant. So almost a majority of the mutual fund companies who invest in large cap company or multi cap companies, have this HDFC Bank. No doubt about that. Um, so this one just came in the news 1 hour back. HDFC Bank still losing credit card market share brokerages share. Okay, so this is a negative, definitely. But I think I have some bigger news, much more positive news. And since this is the largest bank of in private bank in India, I will more focus on the positive sides. This is the thing. Now here we can see. So today it is trading at around 1347, rising. This is the chart. I will come to that later. Now here you can see the past performances. The price performance last 1 week is negative. It has fallen 1.96%. In 1 month it has fallen 10.04%. In 3 months it has fallen 11.75%. In year till date it's 8.85%, and 1 year minus 13.70%. In 3 years 26.83%. So that's the thing. What are the strengths? Rising net cash flow and cash from operative activities. Weakness is inefficient use of capital generating profits. This is a negative. Brokers upgrade recommendation or target price in the past three. Hmm. Increasing NPA in recent results. So this is the thing. Let's come to their big sharks. So individual investors, there is a long list from Rakesh Jhunjhunwala, Premji and Associates, Radhakishan Damani, Mukul Agarwal, Ashish Kacholia, and the list goes on. And institutional investors, there's SBI Group, ICICI Group, HDFC Group, Reliance Group, Axis, and continues. FIs has also invested in large quantities in this company. Now the news that I was talking about. So this is the news that I was talking about, that came to my notice, that removal of Russian stock from MSCI to divert about 600 million dollar inflows into India. So this Russians, since everyone is banning Russia, the Europe is banning Russia, America is banning Russia. So there is a so removal of this Russian stocks from the MSCI to yes, so the whoever the investors are, they have to invest somewhere those money. The six, so there is a there is a high possibility that this um, $600 million inflow will be diverted in India. This is news is given by this Edelweiss. This inflows, and here is the thing, this inflows will get distributed into index heavyweights like Reliance Industries, Infosys, HDFC, ICICI Bank, and TCS, the brokerage reports added. So, removing Russian stocks from the MSCI index will lead to 600 million in foreign inflows into Indian equities, brokerage firm Edelweiss Alternative Research said on March 1st. These inflows will get distributed in index heavyweights like Reliance Industries, Infosys, HDFC Bank, ICICI Bank, and TCS, the brokerage reports added. If MSCI finalizes to remove Russian stock from EM index, and at the same time, if IS are not restricted to sell the constituents, then it could lead to 25 basis point increase of India in MSCI. Emerging markets. The inflow in India as per current EM market cap could be $600 million, which would mainly get distributed in index heavyweights like Reliance, Infosys, HDFC, ICICI Bank, and TCS. The current weight of Russia in MSCI emerging market index is around 2.3%, which Edelweiss expects to reduce to zero post exclusion. After this, China, Taiwan, India, and Korea will benefit the most. Can you see this highlight? Earlier news reports suggested that MSCI signaled potential exclusion of Russia from influential indexes and the ongoing Russia Ukraine conflict. Western countries have imposed large scale restrictions and sanctions on Russia following the military invasion of Ukraine last week. So, that is what I was talking about. So, as you can see, everyone is sanction with those sanctions. Oil and gas major shale announced its intention to exit all its Russian operations. The decision comes a day after the rival British Petroleum abandoned its stake in Russian oil giant Rosneft. So Norway's Equinor also plans to exit. So India will get benefit from this. Now, this was the key news that I wanted to share with you. Now come to the Nifty Bank chart. So Nifty Bank chart, this is a daily chart you can see here. Now it has fallen from its peak of 39,273. Sorry, it was peak crossed 42,000 approximately, and from there it fall to 33%. 33,157 now trading. So it is a big sharp fall, and it may seem that it is taking a support at this level. Yes, I would not deny that there is chance that the Nifty Bank may fall further and took support at this 30,000 level, but this is also a good support level. This 33,000 level is a good support. So what I will be doing is, I will be doing an SIP mode of investment in this HDFC Bank for the next couple of months, at least 3 months. I already have HDFC Bank covered in my mutual funds and in personal holding also. But despite of the fact, I will accumulate more of this HDFC Bank. Now come to this HDFC Bank chart. See, it has fallen from a peak of 1700, 1700 level to 1340 level. So this is a quite fall, and and it is taking a support. If you can see for the last 3 4 days, it is taking a support in this level between 1300 to 1340. So this is a level. Now let's check the RSI, what it indicates. So the RSI indicates this is at a oversold zone. Now, in a year, you can see it rarely remains in oversold zone for longer period. Last, it was in 2020, it went in oversold zone in 19th March, and due to that COVID phase, and then it again started rising, and from that level, from 770 level, it went high to of 1700. So more than double, 2.5 times it went high. And this is a company where the risk is very less. The risk is very less, and the reward is quite good. It's not possible that you will get a 5 times multiply of the stock in a year, because it's a very stable company. And also, in the on the other side, it will not definitely not you will not lose 50% of your investment in this stock. So it's quite stable, I would say, and it's a good right decision to balance your portfolio with the stable shares and the risky shares. So this is one. Every share cannot be a multi-bag. This is already turned to be a good stable share for the long time. Now let's see the monthly chart, what it shows for the long period. So if someone had, in for example, 10 years time period, so if in 10 years time period, I'm considering 10 years because if you keep an FD in a have an FD in a bank, it almost takes 10 12 years to double the amount. Now here you see, if you invested 140 150 level, and now it's more than 10 times. So 10 times you would have got your money back in this HDFC bank, and it never it didn't had any big fall. So it is a constantly, it is rising, it's slowly and steadily it is growing. Here you can see, and it only it fall sharply in that period in 2020 due to the COVID, and then again it returned back to its peak within very short span of time. It And again today it is having some corrections, and so definitely it took a correction, and this is an opportunity for me to invest in this HDFC Bank right now. Today, if I come to the daily chart, so here it was initially when it opened in the open today. So, so 1340 it is trading today. When it opened in this level, I just bought at this level 1335. I bought this stock today. You can think about, and definitely you can split your planned investment in monthly SIP or weekly SIP, whatever you feel comfortable to. I'm spreading my investment in 15 days SIPs in this stock. So today I'm investing, and again 2 weeks after I will invest another installment in this HDFC Bank. Thank you.